Welcome to Cogent Strategic Wealth's webinar, How Informed Investors Can Integrate Personal Values and Financial Goals with ESG Investing. For those of you who don't know me, I am Kelly Stanley, Wealth Advisor at Cogent Strategic Wealth. In today's webinar, you're going to learn how you can align your environmental and social views with your portfolio objectives. We want to explore how you can support your values while maintaining sound investment principles. Investors have many decisions to make when deciding how to invest their capital to meet their goals. Some investors desire to align their personal values with their investments, and they simply don't want exposure to certain environmental, social, or governance risk, or want to avoid companies that don't align with their values. Investor interest in the environmental, social, and corporate governance, or ESG as it's known, continues to grow rapidly. More and more people are considering the social and environmental impact of their investment decisions, and research has shown this is of particular interest to younger investors and to women. At Cogent, we believe the right plan to make your wealth as high achieving as you is so important, as is choosing an investment strategy that you are comfortable with and can stick with. We help successful individuals like yourselves capture your stellar earnings, build durable wealth, and make work optional. You have choices in how to invest your wealth for your goals of tomorrow. At the end of today's webinar, we hope you'll feel a lot more confident and relaxed about how informed investors like yourself can integrate your personal values and financial goals with ESG investing. Now, a little information for you before we begin. I am joined today by my colleague, Michael Evans, founder and fiduciary wealth manager at Cogent. Together, Michael and I provide financial and investment strategies to high-end achieving professionals who seek to make work optional. Welcome, Michael.
Thank you, Kelly. Pleasure to be here.
Michael and I are also very excited to welcome Isabelle Williams, an investment strategist at Dimensional Fund Advisors, as our guest today. Isabelle is an investment strategist in Dimensional's Austin office. She is part of the Investment Solutions Group, which is responsible for supporting the effective communication of Dimensional's investment approach and strategies to clients and prospective clients. She works across a range of Dimensional's product initiatives and strategies. She holds a bachelor's degree in economics and liberal arts from the University of Notre Dame. And today she's going to help us better understand how investors can approach aligning their values with their personal financial capital through ESG investing. Dimensional Fund Advisors, or DFA, has been exploring integrating environmental, social, and governance, or ESG considerations across their investment platform since the 80s. Not only are they an important partner in delivering investment solutions for our Cogent clients, but they also walk the talk of corporate responsibility. Dimensional is among the first in its industry to have its worldwide operations certified climate neutral by leading climate solutions provider South Pole. Continual innovation and implementation is what we truly appreciate most about Dimensional and their people. Now, full disclosure, Cogent does recommend Dimensional solutions in the investment strategies that we recommend for clients where appropriate. At Cogent, we benefit from Isabelle and her colleagues at Dimensional for their abilities and insights in investment solutions, utilizing their team's capabilities to deliver customized portfolio solutions to fit the unique circumstances of our clients. Isabelle Williams, welcome to Cogent Strategic Wealth's webinar.
Thanks so much, Kelly and Michael, for having me. I'm really excited to be here to talk about one of my favorite topics, sustainability and ESG investing.
Wonderful. Well, I'm going to now turn it over to Michael and take it away.
Wonderful. Thanks, Kelly, so much. And welcome, Isabelle. This is great to be with you today. So Kelly mentioned something that you're going to help us better understand how investors approach strategies for aligning their wealth with their goals. And I think that's a great thing. One of the things I think is a horrible thing is our industry. I think the financial services industry does a very poor job of being open, outright, and transparent when it comes to marketing campaigns. So, Isabelle, I'm going to ask you right from the start here. Would you do us a favor and let us know how, as investors, people that have goals, obligations, commitments, maybe dreams, how we should better understand this environmental, social, and governance, how we should understand the alphabet soup of ESG?
Thanks so much for that introduction. And I think you're starting in absolutely the right place, Michael. There is a lot of interest in this sort of topic. We think sustainability, environmental, social, these are terms that are really appealing to people, but it gets confusing fast with all of the terms out there, all of the jargon. So I think starting with some clarity is a great place to begin. I'm going to share some slides with everyone to help us walk through some of these terms. And these are terms that you've probably seen in the paper, maybe in advertisements, and it can get really confusing. And the good news is you don't need to know what each of these terms mean. There's a lot that can be distracting. And for investors, there's a few key terms that we'll talk about today that can help you understand how to approach this type of investing. And the great news is if you run into terms that are confusing, that's something an advisor can help you understand. And so for today, what I'd like to talk about is primarily this acronym that we hear so much about, this environmental, social, and governance acronym, ESG, which Kelly has used a couple of times, and then also how that really relates to the notion of sustainability and how investors can bring these into their investment strategy. And that acronym ESG is a really important one to start with. It stands for environmental, social, and governance, as Kelly mentioned. And there's a lot that can fit into these buckets. But what investors should know is that these are just types of information about companies that we invest in that aren't traditional financial information. They're the other sorts of things we might care about as investors. So environmental could be how a company pollutes the environment, or it could be how they consider adapting their business for the changing climate that we're all experiencing. Social could be how do they treat their workers. There's a lot that could go into that social bucket. And then finally, governance involves some really foundational principles of good business. How do you select your board of directors? How do you make sure that you are being a fiduciary to your shareholder interests? These really foundational topics. So that's to say that there is a ton baked into this ESG acronym. But when it comes to sustainability investing, it's really about investors bringing some of these concepts, whether they be environmental or social, to their investment portfolio and pursuing those goals alongside their financial goals. And I think, Michael, that's the really critical piece here. This isn't about charitable giving. This is about investors who are investing for their own retirement, for the family's education. And we don't want to sacrifice the important financial goals that they are pursuing, but there's a way that we can do that while thinking about how to align their investments with their environmental, social, and governance values.
That's fascinating. I really appreciate that insight because as an investment advisor, as a wealth manager for clients, what we want to do is make sure that our clients have a financial plan that fits their unique circumstances, that it all entails all of the things that are important to them, from their obligations all the way to their dreams. But I believe that investors have better experiences if they actually better understand how their assets are invested. I mean, it's their money and their future, right? And it's really important for them to know and be aware of the strategies that they have. And one thing that I like about when investors better understand how their assets are being applied. And it's not a black box out there. It's not something they can't understand, like some other hedge funds and some private equity situations and things that are way too complicated. Sometimes even their own providers don't get everything that's going inside. But when they can actually understand how their values are linked with their investments and how both of those can actually overlap in a well, I think they're going to have a better situation, a better experience, and be able to stick with that solution for the lifetime that they need to go. And one thing I really love about Dimensional is we look to your firm to assist us in discovering and implementing those investment strategies. So I really appreciate that. I really appreciate you taking a deeper dive on that. Kelly, I was going to ask you. You want to take the next question?
Absolutely. So Isabelle, tell us a little bit more about what sorts of issues can you address with sustainability and investing, and what is Dimensional? How do they decide what sustainability issues to focus on in the first place?
Yeah, absolutely. There's so many things to choose from, which we just talked about. You think about all of the different things that could go into these buckets, and we need to be selective because we can't address every issue at the same time. And certainly ESG isn't always one size fits all. I think one important piece of this is if you are concerned about how your financial return might be impacted by something like climate change. So is an oil company preparing for what a lower oil dependent future looks like? That's a foundational issue to all investors. And that's something that no matter what your environmental or social goals are, we can help address through active governance practices like engaging with companies and voting proxies at those companies. So that's something that we know is a goal of all investors. Everyone wants to make sure their investments are protected from real risks out there in the world. And so that's a piece of all investing, not just sustainability investing. But I think, Kelly, what you're getting at is if I'm an investor who's decided, I think I want to do something a little bit more environmentally or socially focused with my money, how do I take that next step? And I'll talk through how Dimensional thinks about doing that. And it really does begin with this idea of focus, of understanding that we are trying to pursue really important investment goals. And so we need to be targeted and selective in which types of environmental and social goals we incorporate into our investment approach. And at Dimensional, that starts with looking to the research. Now, we are very based on economic and financial research at our firm. But when it comes to environmental and social research, we look to scientists in the climate science community to help us bring that same research-driven approach to how we're understanding these issues. And that leads us to really focus in on the issue of climate change, because acknowledging there are so many other environmental and social concerns out there, the science community is telling us that it's this climate change issue at the forefront that we need to tackle together. And that is how we end up with a climate change focus. And then we work with those data providers, we work with those academic researchers and data providers to figure out how do we get data linked to climate change? How do we get data that can be incorporated into an investment approach? And so that is super important to how we're doing this, because we need to be transparent with investors. Michael has alluded to this a couple of times. Being environmentally friendly is obviously something that sounds and feels really nice, but what does it mean for an investment approach to be environmentally focused? You need to be able to understand data on that. And this goal, along with that climate science focus, leads us to really focus on emissions data throughout our approach, because we know the science is telling us that human-generated emissions are a leading cause of climate change. And we know that emissions data is something that investors can look at, they can understand and see how their investment approach is really looking in terms of its emission exposure.
Yeah, that's fantastic, Isabelle. I think your focus that you talk about research and driving is really important. When we look at who we talk to as prospects and clients, they're all high achievers themselves. Many of them have MBAs, JDs, even PhDs. So many of them in their life, whether they're an attorney looking toward precedent, or they're an MBA running a portfolio, or a PhD that works in some field where research is the drive, I think that your focus aligns with what these high achievers want, because what they really want is to make their wealth as high achieving as they are. But they also want to make sure at times, for some, that it's important that their values are aligned with it. So really, really appreciate that. Let me ask you another question. So you're sitting across from somebody that we work with, and they're wonderful. You know, they work in a very research-based field, but one of the things they might say to you is, how do you design an investment strategy that would focus on these sustainability objectives? Like, how do you incorporate climate change directly?
Absolutely. So we look at something like a chart that we've all probably seen in our maybe get a little nervous when we look at. We see increasing temperatures. We see that is linked to emissions. And then how do we reflect that concern that we have in building an investment strategy? And this can be a complicated topic, but there are a few key pillars to how we at Dimensional take a data-driven approach to doing this. And it's going to start by looking at the types of emissions data we want to incorporate. At Dimensional, we're focusing on companies' emissions intensity. So how environmentally efficient are they for shareholders, and their potential emissions from reserves. So think of that in terms of, are they holding large fossil fuel reserves? And we're going to look at eliminating from our portfolios, our sustainability portfolios, the worst offenders on those metrics. So those highest emitting companies. And then we're going to go a step further and compare companies to their sector peers. So we've already tossed out those that are kind of the worst offenders across the board, but we want to further analyze within each sector how high emitting is a company. And this is important because it's very sensible to you really understand that an energy company is a different peer group than a financial services company when it comes to emissions. But we're trying to build diversified asset allocations here that cross sectors, that cross countries. And we think it's still appropriate and important to reward sector leaders in sustainability terms and potentially remove or underweight sustainability laggards, regardless of the industry that they're in. So we combine this sort of broad, remove the worst offenders with a reward sector leaders approach to integrating emissions data. And then, of course, we also make a few additional considerations for sustainability investors around issues that many investors care about. So we'll remove, for example, tobacco companies from the portfolio as well, because those are issues that we tend to find many investors prefer not to invest in those companies.
That's amazing. So you take a screen, you look through this, you use the research to apply to figure out which ones are the appropriate ones to carry. But are emissions the only thing that you screen for when it comes to the environmental impacts that you're considering?
Yeah, we really do focus on emissions. It's the leading sustainability consideration in our approach because we know it is so closely linked to driving climate change. But we recognize there are other important types of environmental impact that matter to many investors and matter in particular sectors a lot. And so we do combine several other types of sustainability metrics in our sector peer comparison. So things like land use and biodiversity impacts, water management, things that wouldn't necessarily show up in emissions data, but we know are important in terms of understanding a company's environmental behavior on a peer relative basis. So we do provide that more rounded picture, but we want to be really focused on emissions because we know from the science that it's the driving concern.
Great, thank you.
And so, Isabelle, what exactly are the sustainability outcomes of this type of an approach?
Yeah, absolutely. I alluded to a little bit ago that it's all well and good to say we're gonna be environmentally focused in a portfolio, but you need to see the evidence. I think that's one thing that a lot of investors who are data driven and high achieving professionals really understand. You need to see reporting and know what you're getting out of your investments. We all expect that on the financial side. No one doesn't want to see their financial performance, and we need to have a similar approach and rigor to our sustainability reporting. So if we take an approach like I just walked through and we look at what that actually means for an investment strategy's emissions footprint, I'm going to walk you through a sample of the type of reporting that advisors who use these strategies can provide. On the left-hand side of the screen, we're going to look at a portfolio's emissions intensity footprint. And the portfolio we're looking at here is the US Sustainability Core 1 portfolio. Think of it as a broad market portfolio investing in all different kinds of companies in US equity markets. And we're going to compare that portfolio's emissions intensity footprint to a market index, a benchmark, the Russell 3000 in this case, which is approximating the broad US equity universe. When we look at emissions intensity, we can see that through that methodology that combines kicking out the worst offenders with that sector peer comparison, we can reduce the emissions exposure of a US equity portfolio by about 80%, which is, I think, really exciting when you consider that it's still a broadly diversified strategy holding lots of different names across lots of different sectors. And then when we look at the right-hand side of the screen, we're going to look at one other emissions lens, if you will, to this portfolio's emissions exposure. And this is the portfolio's exposure to those fossil fuel reserve type future potential emissions that we talked about. And you can see, comparing to the same benchmark, that the portfolio is effectively able to remove exposure to companies that are holding those fossil fuel reserves. So you're looking at here a dual emissions view. You're looking at what the company's actually burning today, how environmentally efficient are they being, and what emissions might they enable in the future because they're sitting on a lot of fossil fuel reserves. And this is just kind of one snapshot that I think gives you a good sense of the level of overall emissions reduction, but it's just one piece of the type of reporting that supports this sort of emissions focused approach.
So if you're a busy professional and you engage with someone like Cogent and our advisors, and it's almost table stakes that you expect them to be able to pick a strategy, to be able to apply it to their wealth. But then if I understand you correctly, and this is something I'm appreciative of, you give us tools also and metrics within those tools that actually show what the ramifications are of the choices that we've made. So if someone has a concern about investing in highly emitting companies, both on many levels or whatever, and they want to reduce that within their impact of investing, you guys can actually help us convey on an educational basis going forward with the clients that they're able to see the ramifications of what their money is invested in and how it's doing above and beyond returns.
Absolutely. This can become part of what you review about your investment portfolio.
Yeah. See, that's what we love, because I think one of our jobs is to be an interpreter, to be an educator, and to talk about trade-offs. And while we can benchmark the funds and make sure that you're achieving what you want in your goals as an investor, you'd also like your advisor to be able to give that feedback later to say, while we chose this, let's see how it's doing, and let's give us some metrics. I don't know anybody that wouldn't want that in their life. So we appreciate that the Mencho and your academic rigor actually is really good with conveying that. So thank you. We appreciate that. Another question that we have for you is just, when you look at sustainable investing and how it's performed over time, like I said, one of our jobs is to educate. And I think one of the big things is the trade-offs. There are always trade-offs in anything that you pursue. So in Cogent, we are evidence-based investors. We look towards factors within the market that allow investors like you and me to be able to invest our capital and then be able to lean a little bit heavier than just owning the market and home. We also want to own those factors, such as smaller stocks, value stocks, even more profitable stocks, companies throughout the world that are going to work every day to produce value. But we want to be able to own a little more of those because of the higher expected returns. But talk to me about, if you were to add this sustainability element, what should we look at as the trade-off?
Yeah, absolutely. So when you decide to invest sustainably, you decide to take an approach focused on also reducing your emissions. Like we talked about at the beginning, sustainability investing is about pursuing both those financial goals and those environmental social goals. And we can't let the financial goals slip in the interest of lowering these numbers we're looking at now as low as possible. And so that's really the key for Dimensional in thoughtfully designing these portfolios. Can we deliver an approach that pursues higher expected return using those factors that you just listed, size, value, profitability? Can we do that while adding this dimension of sustainability? And the good news for us as investors looking at data is Dimensional has been running this sustainability core one portfolio for over a decade at this point. And we've also been running a very similar portfolio, the US Core Equity 1 portfolio, that takes a similar investment approach focused on small companies, value companies, high profitability companies, but it doesn't include this emissions focus. It doesn't have a stated sustainability objective. So we can compare how, over their shared history, these two funds have performed relative to each other. And certainly you'll notice they aren't moving exactly together, but over the long term, they move in a very similar manner. And that's how they were designed. They were designed to be able to pursue that investment goal over time while delivering that reduced emissions footprint we just looked at for 80% reduction in emissions intensity. And so what we're looking at here is a growth of wealth. So starting with $1 invested back when the sustainability fund launched in 2008, how has that dollar grown in either fund over that period of time? And you can see for this period, the sustainability fund has certainly kept pace with its non-sustainability peer. And this, I think, can give us a lot of confidence in the research that's being implemented in these portfolios.
That's fascinating, because when I started Cogent over 11 years ago, there was this discussion amongst financial advisors. While we knew there was space that this could, in sustainability, all of ESG, that it could come about, there wasn't long enough amount of data and research to be able to really convey to our clients that we had some much better confidence in the strategies, and that confidence led us to be able to say that we felt good about you taking those steps within your portfolio. But now that the data and rigor has been aggregated together, now that we see there is some history, and it does show that your trade-offs aren't going to have you suffer, especially when you pair it with the size, value, and profitability, that you're going to have as good of an outcome on average. I think that's really important for us as advisors, the stewards, the educators, to be able to articulate. So we appreciate this feedback all the time about we've developed a systematic way to address this, and here's the data. And if you have a client that wants to impart these values, there is data showing that they're going to have a successful experience, as would a investor that doesn't take this. And there's no judging on which one's right or wrong. It's just if it moves someone off the needle of being able to invest and being able to do it for a long time, because we all know that is what an investor needs to do to be able to have a great investment experience and attain their goals. And if this rigor and systematic investing way is actually identifiable and can be articulated to clients, I think then it'll move them off the needle and be able to have them invest for the long term and share in the prosperous society that you're investing in every day. So thank you for that. I really appreciate it.
Absolutely. I think that was super well said. It's about helping investors achieve their goals. And you're absolutely right. We have the data, we have the history now that we can support investors pursuing both those environmental and social goals and those investment goals at the same time with confidence. But it's still something we need to be really thoughtful about how we do. There's a lot of different ways you can do ESG or sustainability, and it's incredibly important as a practitioner for advisors that we've carefully considered those trade-offs you're talking about, because they do exist, and we really think carefully about how we combine those environmental goals with those investment goals in order to get to what we're seeing here, which is that really similar experience that lets you pursue both these things if that's what's important to you and how you want to invest your money.
Yeah. Well said on your part too. Also, I think Kelly and I can appreciate what you said there, because I think we all have this passion about how can we help investors better understand where they're at, where they're going, and how they can apply their wealth to that. And if we can be better educators, better guides, it serves us well. Isabelle, from listening to you and learning from you today, I got to tell you, I hear some things in your voice that tells me there's probably a little more to this than just a job. Can you tell me, how did you come to this role, and how did this become part of your mission?
Absolutely. This is such a topic I'm so passionate about, and I feel very fortunate to work on this topic at Dimensional, because we get to be so research focused and work so closely with the scientific community. I was fortunate enough to be raised by two scientists, and so I really value the opportunity that when we work with our ESG network that includes climate scientists, when we see the new UN IPCC assessment on climate change, we have those resources available to pick up the phone, to send an email, to dissect what does this mean? How should we think about it? What does this change? And it's being close to the science. It's acknowledging that we do face trade-offs in every aspect of our life when it comes to sustainability and the choices we want to make. I think that rigorous approach, that science-focused approach to doing this, hopefully the right way that people can understand and see that transparency for, because that's such a big issue in this industry. As you said at the outset, we want people to understand what they're getting, to invest wisely for the future, and be set up to achieve those goals while feeling really good about how they've done it. And it's an exciting topic for me. I feel quite lucky to get to combine that environmental interest with my passion for investing every day.
Well, that's beautiful when you can marry purpose and profession. I think you're in a good spot. So good on you, Isabelle, and good on your parents for them giving you that basis to be able to appreciate that. I think that's great. I just want to say thank you. We really, Kelly and I are so appreciative on behalf of all the people that'll watch this, but we really appreciate the investment you made in us today, Isabelle. It's obvious that, we're evidence-based and data devout. We're almost unapologetic about it. And, while it would be great if there was a secret sauce that we could uncover that was so much easier to ascertain, would that be great? But the fact that you guys actually apply the rigor and data, or the rigor to the data to parse out what's really important and we should focus on what we shouldn't, we're very much beholden to the researchers and to the others that help us better articulate that to our clients. It's 20 years ago, right about now, when I started my own path here to start to really embrace evidence investing. And it served my family and I well, and our Cogent family now for over 2 decades. So it's been wonderful. We really appreciate that. We really hope everybody on this webinar also appreciates the investment and the time that Isabelle and her colleagues take all the time for our benefit. It's pretty impressive, but we appreciate the strategic and the systematic approach you guys take. There's very little room for guesswork when it comes to designing, building, and protecting a financial strategy for you and your family, and Dimensional really helps us execute on that. It's voluminous, the data that they look at, the decades of it is impressive, but when it comes right down to explaining it, I think, Isabelle, you really reflected what we appreciate most, that while it's very technical in data in its manner, it's also, if it can be distilled down into not a simplistic but an understandable and digestible manner, I mean, it's just going to be such a better experience. So we really appreciate you taking that time and helping us with this. Can we count on you in the future if we have questions or prospects or anybody that wants to just know a little more, that you'd be willing to join us again and do this again in the future?
Of course, I truly get to talk about this all day, and I love it. So bring on the questions, and we're here to help.
Fantastic. Thank you.
Yeah, just to echo what Michael said, Isabelle, we do greatly appreciate your time and your knowledge that you shared with us today of this topic that I think we'll continue to learn more and more about as time goes on. And I'm certain it provided a great benefit to our client families that are listening in, and will allow them to better invest for their long-term goals that align with their own personal values. So thank you for joining us today. And just a quick wrap up, after reviewing this webinar, if you do have additional questions or concerns around what we talked about today, we are happy to address those questions for you. So please shoot an email to conversations@cogentsw.com, and we will be sure that you receive the answers that you are seeking. Again, thank you for joining us today. And Isabelle, thank you for your time.